Whoa, let's get that mic going. Good morning, Doc here from North America. It is Tuesday. All right, the game has begun. Let's see where we're at there. We're trying to put this dollar Swiss in there right now, see what they're looking like there. Boy, I heard a very interesting statistic this morning that caught my eye. I was able to reverse engineer in a sense. They bought 300, I guess it was 3.5 billion dollars worth of A stocks in Shanghai, and whoever they are, and the investors, of course. And by doing so, it was foreign investors, and by doing so, it pushed the yuan 22%, which is fascinating. That you get that much of a move for on $3.5 billion, which catches my eye because how can you be the world reserve currency if someone buys $3.5 billion worth of dollars? It doesn't move the dollar, but a 22% move in the Japanese yuan, 20.22% seems to be an awful enormous number. That was on Fox Business. For you currency traders out there, you take a peek and see if it actually made that move. It didn't make that. We can take a look at it in the webinar here, but I thought that was a very eye-opening situation. That really caught my cognizant part of the mind there. So anyway, let's go see who's on the chat line this morning. That's what I'm usually projecting that point of view constantly, and it's not that I'm pro or against the yuan. What I am is concerned that it doesn't have any liquidity. That's the problem. 2.5% of the world trades it, so I kind of get confused why people would think that they would want that. You would think the second largest currency in the world would be the one that they talk about, making it the competing reserve currency. That was the objective when we in the States here in the currency markets pushed for a European currency. We were hoping that that could take the pressure off our statistics and what's the word I'm looking for? The fundamental numbers are distorted here in the States because of the dollar being a global currency versus a domestic currency. And so it was a really strong. Matter of fact, I read a story just recently. It was very fascinating. Nixon was concerned that Charles de Gaulle, the president and former general of France, the reason why he pushed to change Bretton Woods and make the dollar not backed by gold was that he was convinced that de Gaulle was going to buy enough dollars and exercise it to take all the gold reserves out of the United States. And that was literally the rationale behind it all. So allegedly that was the rationale behind it all. So, I'm always, when I look at currencies, I don't look at it like I'm an American, yeah, ray, hurrah, we got the strongest currency. I look at it as a trader and a fundamentalist, or when I mean fundamental, looking for the statistics that we follow to try to judge when to buy a currency or not. Inflation and producer prices, which is the inflation side of it, and consumer confidence, how they're buying or selling items, the GDP, the gross domestic product of a country, and then the interest rates itself. We look for those fundamentals to give us a generality how to choose a currency, to buy it or sell it, that type of thing. And so here in the States, as someone who has been trading currencies before there was a euro unit, and the reason why it's called a euro unit, not the euro dollar really, is, it's a euro dollar pairs trade, but it's called the euro unit because we already have a euro dollar. We've been trading since a long time, and it became a futures contract, in like 1981 or 82 or 83, right around there. And that's the largest futures contract that is traded in the world, in the United States, or probably in overall. And that what it does is it measures money trading outside, U.S. dollars trading outside the United States. That's what the euro dollar is. It's American dollars in Europe trading, and the minus the cost of transmitting it back to the United States. That's how large the the use of the dollar is over the last half a century or more, since World War II. So we created an offset to actually subtract out the cost of moving money. So when you have, $30 billion, you're not moving it for free. You have to pay for it, and so you were able to offset the cost of transferring money. And there's a euro. There's a yen dollar pairs trade, or not a pairs trade, but a futures contract also that trades how much money was in Japan, and when you go to transfer it to the United States, the cost of that, and that's why those things exist. So it's an odd product when you really think about it, but it's enormously traded, incredible amounts of volume, and the ticks are really tight too. I mean, it's not like you could stand in the pit and just trade the bid and offer all day long. It barely moves, and then all of a sudden something occurs, like a shift in interest rates and so forth, or inflationary numbers. The fundamental numbers come out on something, and all of a sudden it shifts it. And the next thing you know, it's moved 3 or 4 ticks, and I think Robin might have floored broke, didn't it? I remember walking over to the pit because there was so much volume in it. I just thought, oh my God, I got to be involved in this, but it didn't have any volatility. And I was a volatility trader then, and I'm pretty much a volatility trader now. So I needed that volatility to have action, product to trade. So it really wasn't worth trading it, as far as I was concerned. So anyway, that's where we are there. So let's take a look at it. You can see here the euro on the J4X has been moved. Not the euro. That's a 1 weeker. Let's go to the daily. You can see there the dollar is. Let's see what the dollar is. Dollar is moving down. You can see that because the Swiss is going down, and when that goes down, it means it's increasing in value against the dollar. So the dollar is losing money. And I do believe it went into a daily sell yesterday. The dollar index itself. Let's check it out on Chicago Quant, my proprietary work. You can see it there up top. It's just sideways. Let's get that mouse there. You can see it right there. It's just sideways action, nothing major. Went into the sell yesterday. Had been in a buy. We can put that line in there. Oop, wrong place to put it too. Let's put that line down where it belongs, right down there. And so it slid into the sell there yesterday, and it's doing a little bounce up. Let's see what's doing. J4X is doing the same thing. It's trying to do a little bounce up, as you can see right there. And same thing on our work. What else can we say? Been in a weekly sell since the 125s. Are we looking at the right product? 125s. No, that's the wrong product. Let's move that. Let's find out again. Must be Canadian I'm looking at there. How about that? Canadian went into the sell too. There it is. Okay, that's better. And then so you can see here, it's been in the sell for that slide. I guess no, it went into the buy here. Let's put that in there. Because I know on a fact check spreadsheet, you go down to line 21, it's only 1 day in a sell. So it's been bouncing in and out. Went into a buy here, it goes in and out. And it's been in a weekly sell though for, let's scrunch that up. Wrong mouse. Let's go like that. So it's been in the sell since the, let's move this, change this a little bit. So we can move this. No, I didn't want it to blow up like that. There we go, that's better. Now you can see it right there. So you can see it's been in the sell. Right there. You can see it's been in the sell since right here. Back in April 9th, it went into the sell, confirmed it at the end of that week. Went into the sell in here in the 93s, and it's been in the weekly sell all the way down, and then it went into a buy here. It's been kind of wishy-washy the last couple weeks. So it went into the buy there, then it went into the sell 2 days later, no, I mean the next day later, and then it went into the buy again the next day after that, and then it went into the sell again. Usually it's a sign of volatility when I get that noise like that. And so that's cool. Let's go like that. Let's take that one and turn it red, like so. There it is. And then right there again, yesterday. Now you can only take the shorts if you're trading the hard delta. If you're using the binaries or the options, you can trade them differently. But in other words, tool-wise, product-wise, vehicle, however you want to describe it. But in this case here, this noise right here usually is indicative of some wild action to get rolling along. In other words, it'll break up towards the black line or break down towards the lows of a couple months ago, right down in here in the, you can see it here, let's move that up, where it broke down into the 88 area, playing with that 88 for a while there, for months, dropping below 88, going into the 87s back in January and February. So that's the Swiss, and that's a good indicator or description of the way the dollar is trading. That's why we watch it like that. And we'll move this over a little bit, and you can get a better flavor there. And you can see here it did try to go down lower today, and has tried to lift back up somewhat. But we went into the sell there yesterday, and you could take the sells on a hard delta, what we refer to as a hard delta, which means that you're just shorting the spot. Whereas there are other vehicles. That's one way of trading a product. The other is through binaries or options, or a spread between the hard delta and the options, or a spread between the hard delta and the binaries. There's all kinds of wonderful tools you can use to trade these products. Alrighty, from there we go to the euro. Let's see what she's doing this morning. You can see there the euro tried to get into the buy there yesterday, and in the first hour it lifted up last night, which automatically pushed it into the buy, like so. And I'm sure we have, no, that's not where it belongs. Let's put it down below again. And over on the fact check spreadsheet, look on line 14. Let's see, where's it at? Line 14 says, yes, 1 day in a daily buy. That's, no, I'm sorry, euro spot. How's that 6? I think it's reversed. The euro GBP is 6, and this is 1. So let's fix that. 1 right there, and that is 6. There we are. Let's save that. There we go. That's why it's nice to have the charts in front of us. You can see what's going on there. So it went into the sell, fought it there, and then the close of last night, because there's a red dot in there right there, forced it to not be official on the close. We wait for an hour into the evening trading for in our concern, and if it's trading above the close and it's got a green dot only, then we throw it into a buy. That's how that usually works. All right, that is how it does work. So there's the euro. You can see some strength coming in. It seems to be supporting this dotted line we've been following for about 6-7 months, and it's kind of impressive that it's lifting up in there. And we'll see how that keeps on going along. I know that there's a lot of action with the ECB. I think I mentioned it yesterday. I was reading a really intense article over the weekend about it all, and they were talking about the central banks and the longevity of the central banks, and what the central bank's objectives are, with what they've been doing, and they were saying that the ECB has the potential to go bankrupt where the Federal Reserve does not, which kind of surprised me. So they didn't really build the ECB very solidly, and they said the ECB is running out of dough. So I imagine their or money, that is. And so what's happening is that what we're probably seeing. This is cable here. What we're probably seeing is that the Federal Reserve is probably propping it up or something of that nature, because they're working in concert, I guess you would call it. That's usually the way they describe it, working in concert. See the cable, tried to get into the daily buy. We did not get that, trading very well over at the time I saw it. And so it's pushing down now. So I tried to get into the buy last night here and failed, and we can remove that 1 there now and push it back over into the sell side there, because it failed at doing what it was supposed to do last night. All right, the cable kind of curious. We've been, we seem to be propped up in the 140s area. We'll see if there's another test, or they finally take it into the mid to high 40s. That's what we're thinking they're going to do in the end result. That has been the objective, as far as I'm concerned, for like the last 4 years. I really think that it's undervalued because of Brexit, not overvalued. Alrighty, let's jump over to the Turkish lira. And you can see here they're flirting constantly. We're in the weekly buy when it comes to dollar Turkish lira, and it's flirting with its weekly buy. I'm sorry, daily buy right there. You know, it's in the weekly buy now for 2 full weeks. A lot of choppiness. You know, it's really interesting, but locked in a very tight range. We'll see. We keep on believing it's going to go after those orange, those little yellow dots right there, and because of the action we had over here, whoop, all this action right there. So because of that, maybe we should do this is now just box it like that. And so because of that action, our math says that it should run to that target area, and we're waiting and waiting and waiting. And so that's where we are with that. Now let's take a look at it on as the euro against the Turkish lira. We'll do that on J4X first. The Turkish euro versus the Turkish lira is a really interesting product. It gives a lot of good signals, but it doesn't give us a lot of good trades that we can take because the options market and the binary market are very tough to trade in that product. So this is more of a product that is less speculation and more of import-export, the fundamental math, you know. You can see here today it's trying to get into a buy. Let's see if we can widen this a little bit like so. You can see it's above in the plus territory. At the same time, you can see for days now, it's been at, oh no, let's change that over. That's the dollar. Let's try ours now with the Turkish lira. Look at the euro, and that is right there. Okay. And so right there you can see it's been underneath, then jumped back up, and you can see here it's went into the buy here, and it's not really left J4X, it stayed with it. For here, it got sloppy one day, right, let's see if we can show it to you. Right here, you see where it flirted with it, and it's zeroed. Now they're showing it's a minus 0.008. So it pushed it into a sell, and now we're pushing back into the buy again. And so it's been choppy, and you can see here it's been flatlined. You know, when not looking at the Hinky Ashi for 4 solid days, and today it's finally getting its its strength, and it's starting to take off in here on the euro Turkish lira pairs trade, which is very interesting. Like I said, it's very insightful. It's like you can use this to trade the dollar one, but it doesn't. A lot of times what happens is it just doesn't give us many trades because we're trapped waiting for a weekly and a daily to join together. But this is very sensitive and very indicative of what's going on with the product itself. Very, very interesting. We followed it for, I think, a few months back, about 7-8 months ago. Someone, Daniel or someone like that, pointed it out. And we started looking at it, realizing how accurate it was. But we found out that it just, because it couldn't line up with a lot of dailies and weeklies together, it didn't get as many good trades as or trades, just trades. Because all trades, not all trades, but something like 8.5 out of 10 are good trades with our math. So it got a greater amount of indication of strength or weakness, but it just didn't put it in there because, let's say, one was a weekly in a buy and the other one was in a daily sell, so you couldn't join in. Whereas the dollar Turkish lira seems to be, allows you to make more trades. That's what the difference is. It allows you to make more trades. But there's no doubt about it, the euro Turkish lira is a much more indicating accuracy level. It indicates with a higher rate of accuracy, which is obviously what we all want. You want accuracy. That's what the idea is you make money through accuracy. All right, so that's the gist of that all. All right, now let's jump over to, let me just save this too. I put those lines in sometimes and forget to save them, and then we lose them. Let's take a look at the Canadian now, right there. And we looked at that a few seconds ago accidentally. You can see it's in a daily sell from yesterday. Still weakness. Been in a weekly sell since late April, since the 25 area. And so, it's dropped about 5 full points down. The oil, now we look at this particular pairs trade thinking that it's related to oil. So the stronger that it is, in other words, the more it goes down in value against the dollar, obviously it's becoming worth more. The dollar's worth less, and that would be a sign that there's some strength in the oil market. So then we jump over to a new one we've been following lately, and that is the Euro Canadian, right there, right there. And there's the Euro Canadian, and as this rises, I guess as this rises, there's strength in the oil market. I believe that's how that works. And so then yesterday there was there strength. Let's go back to the oil market now and take a look at it. Yeah, that's gold. And there is oil. Yeah, and so oil's been strong for the last couple of days. And the same thing goes on with this. You know, as this has been climbing, and then a little hesitation there on Friday, and then back into the strength again. Looks like it's trying to generate it there today. You know, we're getting more strength in the oil market, and it's the trend at the same time. You know, since here, same time period, oil has moved up. Let's take a look at that. And we were in a daily sell. It was really odd. Yesterday we ended the webinar showing how, you know, it was in a daily sell, and you can see that red dot is still in there, just refuses to go away. Let's see, what else can we say about that? It is now in the buy. Actually, it closed in the buy yesterday, right there. The red dot came out last night, so we're in a daily buy for one day. Is it on the fact check? Yeah, there it is. And then now we're showing a little noise here. I guess that's because we're at what, 6-month highs right now. I guess that's what that is. 6-month highs, right around there. Let's get rid of that line and just take a quick look at it. Going back. Yeah, it's just above the 6-month highs. So we haven't been this high since, okay, is that it there? No. So we haven't been this high since September, August, July. There's a whole year we've been much lower. So you know, it's a year and a half highs what we're playing with right there. And you can see how it hits it, backs off, hits it, and backs off, hits it, and backs off. Usually a third time is a run through it. So for you binary option traders, more than likely that would be a very good trade, especially with us climbing back into the weekly buy here this week and in a daily buy. It's looking like a high percentage success rate right there. Alrighty. What did I get here? Got an email from an old trader. It says, softer yields weigh on greenback. Okay, sure. Alright, now we jump over to, where do we go? We look at the energy complex. So let's just take a look at natural gas. And I do remember this morning saving the chart and looking firm at the same time. Yeah, that's right. We put a line in there. See, it's above the zero line here. We still got this red and green thing going on, showing some volatility. Maybe it's going to be action on the upside here. Let's see what it looks like over on J4X. Nat gas. Nat gas. There's West Texas. I know it's here because we look at it once in a while. Let's see where we are. Nat gas, nat gas, nat gas. I know it jumps out too when I finally spot it. It's like, oh, why couldn't I just read that? There it is, right? It's gas combination. Maybe that's it. Natural gas. There we go. And as you can see here, it has had that same weakness as this has had right here, right there. You can see that there. And then now it's trying to turn up right there, just like we're turning up here. Same situation. Strength is turning. We do this on J4X. We've taken us months and years to put together something that's remotely close to my Chicago Quant proprietary work. We're using a Hinky-Ashke to emulate the dots, which can be a little sloppy, but it's better than nothing, traders. And then you can see here we're using two stochastics, a slow and a fast, competing with each other. And then we have some people that watch the webinar that like to use the what do you call that? The MACD. I don't find that emulating to our weekly or our daily. You know, I mean, it's definitely off. But I guess if you're a MACD person, we find the MACD functioning like a lagging indicator, not like this being a leading. And the Hinky Ashy are also lagging indicators, because that's usually about 6 hours behind my dots. But they're better tools than none, and that's the way we always look at things. Is that if you're in the middle of the trading day and you're trying to figure out and you don't get Doc's charts, then obviously it's better to have something. And this J4X formula we put together works out very well. Alrighty, where do we go from here? Let's go take a look at see what the Robo Gas is doing. I mean, for us in the States here, they've been pushing it up. Let's see right here, and that's the gas oil for the automobiles. Right there, Robo Gas July. As you can see here, it's done the same thing as that natural gas is doing, kind of playing with a line in here, 215 or 216, and this side hasn't taken it out yet, but you can see here we've been in a buy from here, and then we went into the sell here, which was interesting. And for a couple of days we were in a sell, and it's trying to get into the buy back in here now, showing strength. Now you couldn't take those sells, just take profits off those longs, that's all. Because you can see this product has been in a buy since December, the weekly buy since last year, so at the 140 area. So it's been telling us 114, yeah, 140 area. So this product has climbed 65 cents. It ran, was it 41? That's 60 cents right in here over a 4-month period. And then it tried to do some correcting, and it did a nice job giving us some warnings. At one point, that was a red dot in that particular contract at the time. And remember, these contracts last 2 months and disappear. They're very short-lived contracts. And so now this is the front month, and it's trying to climb up, and you can see it's just refusing to go into these weeklies forever, which says a lot. So, in other words, they expect society to get moving along. I think that's what it's really trying to tell us from this C19 situation. All right, now we jump over to the other currencies that we look at, and so we drift to, take a look at the ruble to start off with. Find the right mouse. There it is, right there. Ruble. There's the ruble. It's slow, nice drift down. Been in a weekly sell since here, which is not that far off, in the 75s, and we're now trading in the 73s. Been in a consistently there. Let's see. It went into a sell. Went into a daily sell here, and refused to get into the daily buy. And failed it there, and went into the daily buy right here. I gotta remember to save this thing. And then it slid right back into the daily sell right there the next day, and it has been in the daily sell since. And on the fact check spreadsheet, what is that? They're showing ruble in a sell for, where's the ruble at? Ruble's in a sell for, there's that, 8 days now. So it's been 1, 2, 3, 4, 5, 6, 7, 8. This is going on the 9th day now. So let's fix that. So this thing can really trend nicely. It really has a good job of trending nicely. We keep on thinking that the ruble will keep on sliding down if we can get some quietness in the geopolitics. And Mr. Biden is not exactly the best at that. It seems like the White House staff are running Mr. Biden, it seems like. Things keep on coming out where he'll negotiate something with the Republicans, and then the staff changes it. And then they go back to the president and they go, I thought you said we could do this. Oh yeah, we agree. And then the staff comes back and changes it. And it's every time the staff is doing the paperwork, they just change it. So it seems like Mr. Biden is being held hostage. He's like that person in the nursing home is being held hostage by the staff. I guess they threatened not to give him the Jello or something. I don't know. So there we are. The ruble's doing its fine job of sliding slowly down, but not any real big action. Just a slow burn on the downside. Let's save that so I don't have to put those lines in again. Let's see, where's that? Save. Save as. Bingo. Yes, there we are. We forget and then we have to put the lines back in. Where are we at now? So let's take a look at the, we go there to the Japanese yen right underneath it. And the yen, went into the sell here, tried to get into a buy there, but failed at it because we had a red and a green and, fell back down again. We have closed in a weekly buy last week, so we're 1 week now in a weekly buy right there. Let's fix that like so. And we can remove the cute little circle like so. You can see here they're lifting up firm, and today they're doing the same thing like they did there 2 days ago. Maybe this time it'll get some legs. Now that is sometimes a warning that the dollar is going to firm up again against everything. So maybe that's why the cable is in this daily sell. The euro climbed into the daily buy and is holding on to that line, and then we're seeing the Swiss coming off its lows. Maybe that's what's going on at the moment. Let's go to the next one is the Mexican peso right there. And you can see here, this is a really good trading product. You can see the weekly now, it was very close last week. It was at, plot 1 was at 0.00, and plot 4 was at 0.00. It was right on the edge. And this week it's flirting with 0.00, and plot 1 is, plot 4 is 0.00. This is really tight. We're trying to get into the daily buy, but we're kind of, let's see, went into the daily buy right here. So let's put that line in there. It's had a hard time getting there. We keep on getting volatility dots. Let's refresh this thing. But so it doesn't allow us to get into it. Now, in this case here, it's down below, and we're in a weekly sell still. So since back here in the 20.5 area, 20.75 area. So it's, what a tight market. It's, which is wonderful for the people of that country, because you want your currency to be as stable as possible, and that's usually the answer to all of it. Stable currency is a really comfortable thing to have. So the next thing we look at from here is, let's see what it is. We go and look at the we look at the South African rand, because we look at that to see how it's acting with the metals market and if it's giving us any indication. Now we have some noise in that sector at the moment. We have silver in a minus, and we have gold in a buy, looking extremely strong for weeks. Every time it goes down towards the sell, it just fails at it. You can see here, this product is in a sell, which means that the currency is getting more valuable, and that may be indicative of people buying some of the South African gold. And then you can see it here at the same time. It's been in a weekly sell since the, what's that, basically the 1475 area. And here we are trading at the 1384 area. So it's been down, and it's nice distances between the sells and the buys, which is nice. And the sells have been the only trade you can take since this week right here. You could catch this short, and you could trade this short, but you couldn't trade those longs because we're in a weekly sell. That's the way it always works here. You couldn't trade the long here, but you could take the short here, and you can see the next day it gave you the money, but then it took it away from you if you didn't use good money management. And then you could take this short here. That was a winner. So 3 out of 4 or 4 out of 4, but 3 out of 4 were easy money, and the fourth one was sloppy money. It was very tough. You had to be paying attention. And then you can see this buy here is, not a solid buy because we're in a weekly sell. But the sell again is right there. The day later, again, see that minus 0.0100. So 0100. Let's put the sell in there, like so. And that was a much easier trade, of course. There we go. Now let's save that. We get hit with questions and so forth, and we get lost, and then next thing you know, we don't save the lines, and then it We have to put them back in again. There we are. All right. Now what we'll do is we go over to the metals complex and see what's going on now. Like I said, it's really mixed at the moment. We have silver down and playing with a weekly sell. Let's show you that right off. Because I'm curious to see if it's bouncing. I keep on thinking it's going to bounce with the way everything is moving. And there it is right there. So we've been in the sell and flirting with the weekly sell. Where did the little dotted lines get to? How does it do that? There we are. So it's playing with the weekly sell. Oh no, I know why it's not there. It's already in the weekly sell. Closed in the weekly sell last week, and we're seeing that it really hasn't gone anywhere since then. Actually, it went more in the wrong direction, and you know, it's still trying to play its way down in here. Whereas on gold, it's been just a really strong move. We've been in a buy since the May 5th area, and that has been staying very firm and steady through it all. Each time we've looked at it during the trading day, especially in the morning, and it's minus, it finds a way to get back into the plus, the gold, which is always interesting. Now, let's see, what do we go after now? Let's take a look at the platinum, because you're seeing here, this is trading at 1882, and I think platinum's trading at 1182. So that spread has fallen to $700. Yeah, 1186. So it's so that's seven. So it's a 696, and it's moved from the $500 area. And when we first watched it, it was at the $1,050 area, and traded down to the $490 area, or 80 area, something like that, and then has played itself into the fives, and now it's into the sixes. So it's having, you know, it's really, we called it the Yellen spread. I guess they're getting tired of it, or there must be an issue going on here. But you can see here, it also, like last week with the silver, went into a weekly sell. So the platinum and the silver are showing a lot of longer term selling, and gold is being snapped up, and as like I said, you can see gold has not let go, not even in the daily. So it's went into the weekly buy in the 17s right here, and on, you know, and each time it's gone in, and it went into the daily even back further, I think. Let's see, where was it? Yeah, the daily was in May, and it stayed in that nice run, and then, you know, it was flat for like 2 weeks, and then the week that it went into the weekly buy, then you got into that buy at the 1775 area, and it started showing some life in it, and then it just I guess it got up to 1800 and then rolled over, but you couldn't take the sells, you only could take the buy, and then that was a nice easy win. That was a nice easy win, and has never let go on this one. So that's where money management always comes in, you know, where you buy a position, you make some money out of it, you take half of it off, and then you put a stop in for like a third or a half or all of it, you know, underneath, and you try to catch the ride on the upside, and if it doesn't, at least you've won on the trade, just not as much as you would like to. But you know what, if you keep on taking profits, before you know it, you're making money. That's the answer to it all. All right, so now let's do this. Let's drift over to, I guess that's about it. You know, take a look at this palladium, and I'm not even sure if that's a June one. You see, they've sold. You know, we talked about this. You know, people were talking about 340 or 3,400. Looking at that back here when it was playing with the weekly, and it was acting strong. We thought that it would have to come back and test this area, and it did. And then they made a new high right there, and our particular person in the webinar stopped paying attention to palladium, and we haven't looked at it in weeks. You can see here we went into a buy there, which was safe to buy, and it's still, oh no, it's also fallen into that sell situation. So there's the buy, and then let's see, went into a buy there. No, it didn't go into a buy there. It couldn't go into buy there because the lines were underneath. So it's been in a sell. No, wait a minute, let's try this again. So it has been in a sell since like right here, then finally went into the buy there, and that was a safe win. And then this was all like you had to just stand aside and watch it. You weren't allowed to trade it because we're in a weekly buy. You can't take the short. Then it went into a sell right there. And you couldn't take that because, again, we're in a weekly buy. And then we get into the weekly daily buy right here. And that lasts for 2 days. And that's a loser in the end. Right there. And at the same time, we were probably... The sell side, this was underneath the weekly sell was underneath. So chances are I was warning everybody that you don't really want to be long that. You would rather be neutral and let the two coordinate together again. And so you couldn't really take that long. And if you did, you were out of it literally the next day. And then the following day gave us a sell, and now you could take the sell instead because we were in a daily sell. And then it confirmed it on this close right there. Let's just check what that is too. Let's see, so there is, okay, so that's the middle of the week, right? Okay, so there's right there. So they confirmed it there. Let's put that in. And that's kind of interesting, and that is that the 3 out of 4 metals. I need to talk to Robin. Robin, can you hear me? Let me just see what Robin's up to. Because we're working on an article about this right now, and so we need to put that in there. Because we didn't do the analysis. That's kind of interesting to see that happen. Hey, are you listening to the webinar? Okay, here's something. I'm doing gold and the 3 metals right now, and palladium, platinum, and silver all went into daily sells weekly sells last week, and they've been pushing down and down, whereas gold has, you're writing about the gold today, and the gold has been very strong, maybe worth mentioning. Yeah, because all 3 of them are in sells. Yeah, they confirmed it last week. All 3 of them are. Yeah, or all on weekly sells for a full week, but here gold just keeps on marching even stronger. Yeah. Roger that. Bye-bye. So, let's see, back to you traders. So that's what's going on there. And that's interesting, and that's because of the webinar. I got a chance, no one's asking questions, it's a quiet day, so I'm actually analyzing, using this as analyzation for things to trade and to talk about in our Chicago Quant organization. That is interesting, how the 3 out of 4 found their ways into the minus. And then copper, let's see what copper's doing now that we're looking at all these metals. Copper's flirting with the weekly sell and just missed it last week. Look at that right there, plus 0.0016. So it survived it, but has been in a daily sell since this top here, back on the 10th. It's been, and it tried to go into the buy here, but we had a volatility thing, and the next day, you can see it's lower than that. So, and then it just fought not to get into the buy here. See that there was a minus 0.008. Where's that? Let's do it again. Plot 1 minus 0.00050. So this has been also fighting the strength in the metals complex. Matter of fact, it's the only metal out of the 5 is gold that's had any real life in it. All the rest of them have been rolling over like little puppy dogs. All right, let's see. That completes the metals side of this webinar. And we always look at the metals as a currency type product. In other words, it's, if you want to buy euros and you want to sell dollars, but you're at your limit of how much dollars you're allowed to sell physically, you go and sell gold because gold is denominated in dollars, and then you go and put a synthetic on to protect yourself against the gold being short, but at the same time you need to convert to your currency, the euro, dollars. But no, you don't. Instead, it forces you to be short dollars against euros at the same time without interfering with the way the Federal Reserve and the U.S. Treasury like to measure manipulation. I don't know how anybody with a straight face can say manipulation when we have quantitative easing now for 13 years when it was supposed to be for 1 or 2 years, maybe 3 tops. And we're in quantitative easing now 13 years. It just doesn't seem to want to stop. They just want to keep on floating money. And matter of fact, I saw, you know what I saw? No, you don't know what I saw. Let me see if I can find it. I'm going to put it up on the screen here. Let's go find it. The Fed balance sheet has advanced to $9 trillion now. Saw that last night. I'm sure they're not really talking about it too much, but you know, that's the classic, forget about news when it comes to the financial news channels. They're not interested in reporting news. They're interested in doing their spin thing. But let's see, we'll find it in a few seconds here and we'll put it up on the board. Let's see. I'm glad I saved these things in folders. I'm just scrolling through. Is that Fed balance? Here it is right there. Nice fresh egg. Let's get rid of that. And let's move this over like so. And then there it is. Check this out. Fed says balance sheet could hit $9 trillion by 23. Okay. And so they're just showing the trajectory of it. And see, where's the spreadsheet at now? So what are they saying? They're saying last week when the entire crypto space was in free fall, we pointed to an analysis by Deutsche Bank, which had laid out in the clearest way possibly why the long-term trajectory for Bitcoin and its non-fiat peers was orders of magnitude higher than current levels. Okay, the reason is the bank credit strategist Jim Reed postulated, said, is that even after a taper, this is far from the end of a balance sheet expansion? And to prove his point, he showed that CBOEs, or that's the bureau in Washington that follows the Congressional Bureau, follows the forecast of the path of the U.S. public debt all the way to 2051. And as Reed said, the debt will need to be funded, and if the Fed balance sheet to the debt ratio stays at the post GFC average from 30 versus 38, then the Fed balance sheet would be around 40 trillion in 2050. 40 trillion, and right now it's just sitting underneath 8 trillion right now. Monster numbers. Stuff to scratch your head at. Wonder if cryptos will be, as long as there's electricity and computers, you're going to have cryptos. And so that is, you can see in '94 the balance sheet was like nothing compared to what it was. In 2008, the balance sheet, let's see which one was the lighter line. The darker line is the Federal Reserve assets with projections based on holdings of 30% of the federal debt. Okay, and you can see here in 2008ish area, you can see this little. Let's see if we can make this bigger. Can we make that bigger? But I can make that a little bit bigger. Oh, you know what? If I go like this, they may allow me to. Yeah, there we go. As you can see here, let's see which one is it. Okay, yes, that's good enough. And you can see here where in 2008 it made that big jump off of this deadline there. It was like I think our balance sheet was like 350 billion, not trillion, billion with a B. And then it jumped up into the trillion. And then it's been riding that along. You can see it's up to here now, and that's almost 8 trillion. So that was a real big jump between here and that flat line. You can't even measure the Fed balance sheet until 2008 on this chart. That's what's so ridiculously insane about it. It makes you wonder what's going on in reality. It's something to be concerned about. So this is a Deutsche Bank analysis of it all. Let's see. So that's where we're at. I thought that was well worth paying attention to. And then from there, I guess you could take a look at we can go look at the 30-year bond. Here's the 30-year bond. It's been acting pretty firm. Went into the sell here from this action that week, and then this one doesn't have. We should be running a. I wonder if we can run a gas 3 off of that. I guess that's what we should do. Is we should let's put it below. Insert, study, and add the gas line, not the gas. We're running a gas on that. Let's see. So let's get gas line 3 in there. There's gas line 3. There we are. No, it doesn't fill in. Bummer. I'd like to see the green line. See how we run a gas line 3 here, but for some reason it's just not filling in here. I guess you do see it here. It's minus like this is. You can see the green line is down below, but it's a real disappointment not to be able to have the gas line 3 on this indicator or this product, just the gas 3. I wonder if there's something else going on in there. Still doesn't do it. Nothing. Okay. All right. So you can see here on the bonds, in other words, this is part of the fundamentals that we always talk about that we just cannot trust anymore. They don't exist. They literally just don't even exist at this point. And so when you take a look at something like this, where they're moving trillions of dollars around, as a matter of fact, they're interviewing the commercial banks today in Congress, and they're having testimony. And basically people are starting to question, how come they're not lending any more money when they have tons of it? The ratio between money on the balance sheet in these major banks and the amount of money being lent out is shrinking dramatically. So in other words, they're getting all this money for free. Why aren't they lending it? And that's because the Federal Reserve only lets them lend money on things they want them to lend money on. And so they can't just go lend the fellow down the road, money to open up a laundry shop or a pizza place or a restaurant or a car repair service or any of that other stuff, because the Federal Reserve wants them to buy bonds and stocks with it, and they give it to them for free. And so that balance sheet keeps on expanding, which is insane, just totally insane. All right, let's see. Let's minimize that again, and we're at what is it? It's a 30-year, and so you can see. Let's see what else we got here. So that's the 30-year, and let's take a look at the 10-year. See what the 10-year is doing at the same time. There's the 10-year right there. Now, 10-year has been going in and out. Went into the buy here. Excuse me, I think we'll take a sip of water here. Just put that line in there, and let's try to save that too. Save as, there we are. And this thing is not, let's see, when did the weekly sell there? Went back into the weekly buy there. The shorter term one went back into the weekly buy there. So let's put both those in. So there, and then there. Let me grab a sip of water there. And so we're back in the weekly buy on the short term, but this week we are flirting again with the weekly sell, I think, right there. The plot is plot 1, which is minus, was that minus 0.05. And then the plot 4 is 24, actually. It's pretty wild there. Oh no, we don't have one. That's right. There is no plot 4. That's a different time manifold. That's a. So we can show you. It's 2 standard deviations. Show you what the gas versus the gas line indicator does. Style. So let's do this. We'll make that, and we'll make that one, that, and then we'll make them dashed lines like that. And so what it is it's looking at the. And in many ways, it's you can see how it hits here and hits the second standard deviation and then starts to break down. Maybe that might be worth incorporating into some of the charts when I use just gas 3. That's an interesting thought. Boy, I'm really starting to come up with some ideas, and that's what that's all about. See, I did the reverse. What gas lines do, as you see it here, Let me just show you. Gas line 3, same math, only difference is we have another plot. The plot 4 is a standard deviation of the plot 1. Okay? So you see the plot 4 and the plot 1 are basically the same, except for it's a 1 standard deviation difference. And that's what that's reflecting. Whereas on here, on a gas 3, and in this way, see the gas line 4 standard deviation code can go in and out of plus and minus, which is kind of fascinating. You know, it follows the histogram or plot 1, whereas this is doing it to the time manifold, which is kind of interesting again, because what we're trying to do is we're trying to identify when. In fact, it may be more fascinating to look at both of these on a daily chart. So if we, let's see if we do this. We'll take this for interest's sake, and we will make that the standard. And what we're going to do is we're going to put this in at the bottom and show you the difference, and then we're going to end the webinar because we're running out of time. But I find this, you know, since no one's asking questions, I'm just exploring at this point. Doc's just doing basic research, which is kind of neat, and talking about it out loud with everybody who wants to look at it. And so now what we're going to do is we're going to put a gas 3 in right there, and at the same time it's going to go at the bottom, and the property is it's going to be following the daily. And then we can take a look at that. So we go like this, move that up, and that's the 10-year, right? Which is kind of interesting. And what we're going to do is we're going to tighten up the weekly for a moment for you, and so we can see this and see the 2 and see what kind of insight there is. And you never know what I learn. I learn things sometimes when doing the webinar. So you can see here, in this case here, the time of the daily jumps up. See how it does there, and we go into a daily buy. And then you can see the green line is the plot 4 and the 1 standard deviation of the histogram. And in this case here, it's the 1 standard deviation of the time manifold. And you can see here how it rides it to there, where it's well beyond here. And then let's see what happens. When this breaks down, it fails at it and keeps on climbing. Interesting. And then when this breaks down, this has already broken down. The time manifold is already broken down, like it was doing here. And you can see the green line is challenging. Here it was challenging this, but was not going down. Notice a lot of times when it finally gets through the time manifold, it breaks down in value a day or two later. In this case here, it started it up top here, emphasizing the importance of that. Interesting how tight that got for an explosion with that volatility. Very fascinating. Anyway, something for Doc to think about. Traders, it was nice seeing you today. It was a nice quiet day, unfortunately. I like lots of questions. So this is Doc from North America saying arrivederci, and we will see you on the flip side tomorrow. So happy trails to you, all my trading friends. Happy trails to you. See you all tomorrow. Doc saying aloha.